Hi guys, this video I'll be explaining how order blocks and liquidity can match up for your own gain in the financial market. Alright, so order block is the last bullish or the last bearish candle that you see before the significant move to the upside or the downside. Whereby the liquidity sweeps can also be the sweeping of all the money in the upside or the downside, where you have the wicks most especially at the bottom side of the chart or at the top side of the chart. So this is a fake move made by the institutional bankers in a situation whereby they want to actually sell but they will buy instead, or in a scenario whereby they want to actually sell but they will buy instead. All right, so let me show you how this works together and you can use it for your advantage in the SMC world. Money trades with huge volumes, they can't just buy or sell without making a fake move. Okay, so the retail traders actually go to buy or sell directly. All right, and you know that the smart money traders, the hedge funds, the big banks, they come into the market with millions and thousands of lots. All right, so to enter or exit a big position, they need the opposite side of the trade. So that's why the market goes to the downtrend, creating a new lower low and lower high. All right, so this form is actually the formation of the liquidity, because we do not have any candle in the front of all the lower low and lower high. All right, so that's why they form the sell. Okay, they actually want to buy, so they form the sell. After forming the sell, the next thing they do is to create a new change of character, which creates the uptrend, okay, to the upside. All right, so basically the traders who don't know that the smart money traders are actually waiting for an opportunity for them to have a liquidity pool. Okay, when they have the liquidity pool where they could actually maximize their lots. Okay, all this side is a big amount of money sitting in this direction, because the actual thing they want to do is to buy, but they will sell first before buying. Okay, so let's go to another example where I'm going to show you how the order blocks works with the liquidity. The next question is, what is an order block? The order block is a zone where the bullish move or the bearish move takes place. All right, so when you have a big bullish move or a big bearish move that takes place at the top side of the chart or the downside of the chart, that's an order block likely to be there. So what the smart money traders do is that they create an order block for the price to rebalance at that order block, so that they're going to refill more orders in the market. So when you see another block, it always creates a temporal halt or a temporal pause or a break of structure before moving to the downside or to the upside. All right, so most order blocks tends to create a fair value gap, which is an imbalance. All right, an imbalance is a magnet for price. So just in case you don't know an imbalance, I'm going to show it to you. An imbalance is very, very important for you to understand in the market. Price imbalance between the buyers and sellers created by strong impulsive moves. Typically, it is visible as a gap between the candles. You can see the candles here, right? We have one candle, two candle, three candle. We have three consecutive candles. So when you see a gap between candles on a lower time frame or even a higher time frame, the key concept behind it is still under the SMC. All right. So we have candle one. We have the first candle. We have the second candle, and we have the third candle. All right. So when price aggressively moves to the downside or the upside, making a gap between three candles. With three consecutive candles and the one in the middle is creating a gap in between them, which doesn't give an access or the entry for a buyer or for a seller. Just know that that is a gap and that's an imbalance. So for you to have a clear understanding of this, if you look at a series of charts maybe in the past, you discover that when the chart is coming in through, when the trend is diverging or coming into this gap, there's always a strong reaction in this gap. All right, so think of it like a ski step. So because smart money often revisit this zone to take another buys. All right, so you can have a bullish fair value gap or a bearish fair value gap. When you have a bearish fair value gap, that means the fair value gap is seated, or the fair value gap is situated at the downside of the chart. And when you have a bullish fair value gap, it means the fair value gap is at the top of the chart. All right, let me just show you the fair value gap currently, all right, on the chart. All right, right now you can see, you can agree with me that there was a fair value gap here previously. Okay, because we have the first candle, the second candle, and the third candle. Now you can see the reaction. We have three candles tapping into the zone, the fair value gap zone, and pushing to the upside. if you draw this zone to this other side, you can see more reactions are coming in into this part. All right. So all fair value gaps are most likely to be tested. Okay. Going by another example at the bottom side, you can see this another fair value gap. All right. We have the red candle, which looks like a dodgy candle. The second one is a bullish engulfing candle. The next one is another bullish candle. Now you can see the space. There was a space between these 3 consecutive candles, marking a space at this top here to the down part here. All right. Creating a fair value gap zone, you can see that there's a retest, about 4 candles coming in to retest into the zone and push to the upside. All right. So when you see a bearish fair value gap or a bullish fair value gap, just know that the price is coming to come and test that zone. All right. Looking at the most recent example, you can see this happened 27th of May, 2025. You can see we have first candle, second candle, and a third candle, and there's a gap in here between the first candle, second candle, and the third candle. This is the reaction now. There's a reaction pulling to the upside. There's also a reaction of a series of candles into the order block zone. So the order block zone is a smart money footprint because the fair value gaps often form after the institutional entries. Maybe there is a large push to the upside or the downside. All right. Just know that when prices run to the fair value gap, it is potential entry zone for traders, showing where smart money may have more orders in it. So this large bullish candle to the upside has a lot of orders, so it must be filled back. Okay, orders are coming back to fill it. Okay, so the fair value gap is important because it shows where the market is likely to return to. It reviews smart money activities and gives precise low risk entry points, because when you look at it very, very well, you discover that it's a bullish candle and then we have a retest in it. So the retest is the guarantee that this bullish candle has a large amount of orders in it. When you look at all the series of examples that I've given, the 2 examples, you can see they're retesting it. All right. These are not bullish candles. There's a retest in it. All right. We have another fair value gap right here. There's a retest in it. There's a fair value gap here. There's a candle 1, candle 2, candle 3. There's a gap in between. All right. You can see there's a retest in it. There's always a retest in the fair value gap. Always a retest in the fair value gap. All right. So let me show you how the liquidity works with the order blocks. All right. Thank you so much. And then trade in the direction of a breakout. All right, that's an order block strategy. All right, so from this zone here, you can see that we can have another block here. Okay, it's an order block that was seated right here previously. So you can see the retest coming in into the order block. So this is actually a retest of the order block in the order block zone. So traders wait for the retests before making their trades. All right, this is a 4-hour candle, and I told you that this zone is actually the liquidity pool because we have a lot of liquidity coming in here. So the buyers and the sellers are lost in the wind because they don't know what the traders want to do. They don't know what the smart money want to do. So from the pool to the downside, okay, leaving an order block, creating a bullish and going to the upside, and it's creating a bearish to the other side. You can see a lot of bearish move down to this point. Okay, there's a fair value gap, a little fair value gap at this point before the counter of the order block, because before it became failed. All right, so smart money uses move to trap traders. All right, so you can see that all these are money, all these zones are money, all these zones are money. So this is the liquidity pool. The money are sitting, a lot of money are sitting around here because it looks somehow like the liquidity, which is the high liquidity, equal high liquidity, but we're not going to that zone yet. Okay, coming to test the zone, coming yet and reverse. So I can equally tell you that this is equal high liquidity. Okay, because I want to sell when I have a retest of the equal highs. All right, so that's not what I'm going to talk about today, but I want you to identify the order block. All right, when you identify the order block, let me tell you that there's going to be a retest in that order block because that zone is a magnet for price, just like the way fair value gap is. All right, it's a magnet for price, just like the way the fair value gap is. Okay, so you can have other blocks in 1 hour time frame. You can have other blocks in 4-hour time frame, but this is the liquidity pool, and all these are money because we're coming from the downtrend. Okay, we're coming from the downtrend. All right, and suddenly push to the top before moving to the downside again. Okay, so they actually wanted to sell, but they actually wanted to buy, but they are selling first before buying. So this is where the end of the trend is. Okay, this is the end of the trend. All right, so when you see another block, just know that the market is coming to that, the trend is coming to that zone. So if price sweep the liquidity high and quickly reverse, the smart money are likely to hunt liquidities to sell. Okay, this is a liquidity high here because we have a series of wicks, series of pins at the zone. There are a lot of money sitting right here. There are a lot of money sitting right here. There are a lot of money sitting right here. And the counter sell, this is a sell. Now the counter buy is what you can see at this other point. Because if I have the screen into two, if I have the screen into two, you can see the money sitting at both the left side and the right side of the chart. All right, so the true move occurs when there's a retest in the order block zone that was cited already at this first point. This is a fade order block already. Okay, before the fade order block, it was a real order block, but this is a retest coming into it, making it to be filled. So they actually want to sell from this zone. Okay, that's why they bought from this part to make back all the money that they did. So they always do the opposite move. So to build up liquidity and come into the market later and start to chase out all the retail traders. So the smart money sell into the liquidity. Okay, so combining other blocks with sweep liquidity, it can actually give you a sniper entries in the market. All right, going by the 1 hour time frame, let's go to 1 hour time frame and see how it plays out. Perfect. You can see this is the 1 hour time frame. You can see it clearly, right? So we have a clear break of structures at all these points. Okay, and a clear higher high, higher low, higher high, higher low, lower low, lower high, the left side, higher high, higher low at the right side. All right, so just be careful when you see other blocks from the 4 hour time frame. You can come to the 1 hour time frame to see it very clearly and set your sell orders at this point. So at this point, I can actually sell maybe at the beginning of the order block zone or at the end of the order block zone, put my stop loss at somewhere here and tap maybe where the trend begins from. Okay, and you'll be looking at 8.8 or something. If that's too much for you, you can look at maybe the next break of structure just to target 3.5, 4.5 or 6 point something like that, and you're good to go.